Good morning, everyone. Welcome to the On Time, On Target Morning Brief. We have a great show for you today. We're going to talk about, we're approaching the end of April today, the last trading day of April. And there's an old adage out there which has not held true for some time, called sell in May and go away. There was a PhD study done way back saying that most of your gains were made in the first 4 months of the year, and that if you simply sold in May every year and then rebought in October, that is when your best all-time returns would have been. And again, PhD studies can tell you all kinds of things. It can also tell you, lure you into thinking that a pattern exists when it doesn't. For example, there could be a day of the week that has outperformed every other days of the week throughout the history of time. It's probably been done. And if it's Tuesday, then it should be you only invest on Tuesday. Obviously, that doesn't have anything to do with anything. However, if you look at, there could be a best minute of the day to invest. So there's, a lot of things to go with this. But when you look particularly at this year and the fact that we've run up, fairly significantly over double digits in most of the categories, we are going to talk about that and just, talk about whether we're going to end the end of the year higher or lower than we are right now. So, and if we think it's lower, then what are some of the things we're going to do? So that's what we're going to talk about today. Thank you so much for checking us out if you're on replay. As far as make sure you subscribe, click the notifications bell. If you want to join us in the room, it's $25 a month. We've got a Q&A window and a chat window that you don't see off the screen. And with that, let's go ahead and get started. All right, welcome back, everyone. Here's our lineup card for today, April 30th, 2021. Make sure you have your chat window set up correctly, as well as your Q&A window. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence before acting upon anything you hear this morning. Full disclaimer information is available at OTOTnow.com. All right, mission objectives for today: grow our money, protect our money, and live off our money. Specifically, we're talking about protecting our money. If the sell in May go away scenario holds, let me get the right screen shared out to you. There we go. The first share didn't take today. So there's what we have. Everything we're talking about, sell in May and go away here under tactical objectives. So, like I talked about in the open, the study was done saying most of the gains are from October to the end of April, and then you sell. So I do think today is going to be a red day across the board. I think enough people believe this, and the gains are there, that you honestly could have completed your entire year of, a normal year already as far as gains. So I do think there's going to be some selling. I anticipate doing some selling later, once I get off the air. I have some things I'm going to target, pretty much get rid of some of the sketchier holdings, and we're going to hold on to stuff that is, bouncing off all-time highs like Amazon, Apple, Home Depot, those sort of names, Google, that are probably going to sell off from here. We're not going to sell them to try to buy them back later. We're not going to have the taxable event, but certainly for the other stuff, Boeing, I think I'm going to continue to lighten up on Boeing out there and build some cash positions or some bond positions to be able to see what tax reform holds. When you look at the entirety of 2021, and this is what we said in January, right? So we're not making this up on the fly, but there's going to be 4 things that affect the market. The first was stimulus. We got that, right? Stimmy checks went out. Everybody's happy. New president, new administration, blue wave, got to feel good about themselves by spending money on the stimulus. The second one was the vaccine slash COVID situation. Are we, are we defeating COVID? Are we opening back up? Are the vaccines working in, for the most part? And all that has been a resounding yes, right? We're starting to do maskless events. New York City says they're going to be open full by July 1st. All of those are very winning things. That's another tailwind of the market. The third one, excuse me, was the infrastructure bill. It hasn't passed yet, but certainly it's going to pass. The Dems have called that it's going to pass by July 1st. I think that will happen. That's another tailwind, and you have to argue maybe all of that's priced in, but buried within that, as well as the latest package that came out, are the tax increases, and that's the headwind of the year. So we've had 3 tailwinds so far. We really haven't gotten deep into taxes, and the taxes we've talked about are the corporate tax rate, which is buried in the infrastructure bill so far, and then the increase in taxes for those making more than $1 million a year on their capital gains taxes, which, that's just not a lot of people. So as we go into the end of the year and they start talking about more mainstream type taxation, I do have to think it's coming. I think we do have to pay for all this, and I think it is going to hit the market. So we need to be very selective where we leave our money to at work. We really have, when you look at both the SPY, the NASDAQ, and the Dow Jones, we have annual gains already booked. The traditional annual gain, if you will, of 10 to 12%, that's already in the books for this year. So why be greedy and try to eke out more? So we'll talk about that. Question of the day is, was a cash out refinance? We got chopped out yesterday right at the open. I don't know why. We'll see if it happens today. If it does, then I'll have some troubleshooting to do, but I think it just, that was just random. All right, our flow for today, market review, headline review back here in the US. Again, a lot of red this morning, even after Amazon crushes it. And somebody from the room brought up a point yesterday, later in the day. They texted me and said, if Apple crushes earnings like they do, and Amazon crushed earnings like they did, and they really don't travel higher a whole lot, doesn't that say we're at a toppy market? And I have to say, yeah, it does. That is a huge indicator. So that's why I have to do some house cleaning today in portfolios. All right, we'll get to the short-term execution. You see in the chat window, let me refresh that for the folks that just showed up. I don't like any of the longs. I just put them in there. If you're long only, say you're in an IRA, that's all you can do. I don't like any of those. The shorts aren't all that fantastic, but I do like Barclays, Skyworks, and Twitter doesn't fit our mold because it's down already like 13 to 14%. But that's something that, even though it's outside of our system, I would take a hard look at shorting Twitter today. That's been overvalued for way too long. All right, contingencies and academic resources are standard out there. All right, let's take a look at TD Ameritrade Think Pipes. There's our day trading setup. We will get back to that. We've got BCS coin, and what's the last one I talked about was Twitter. There we go. You see that's fallen off a cliff, probably down closer to 15% now. So at your own risk, but it's certainly in motion, if you will. All right, here's the S&P 500. So kind of flat. We talked about the trading sideways for this week. So we'll pull it up on the 5-day. So there, I mean, it don't get no more sidewaysers than that. I know a bunch of made up words there in bad English, but seriously, it is really flat lining here after it closed up yesterday, gave all that back by the time we opened today. So I think negative going into the end of the month. There's a lot of window dressing that happens at the end of each month for portfolios because that's when the statements get chopped, right? Which show your holdings. A lot of times that's the only time people look. Coinbase, I know we're going to have to hold it till the first earnings, but that'd be one that probably should be dropped and then bought back later. But I'm going to hold it in anticipation of an uptick at the first earnings. I mean, like blowing it out and going way higher from that. Okay, but I don't think you'd be wrong cutting it here. I'm going to take the risk on it because I think the reward is there. All right. Let's go over to CNBC.com, take a look at the futures there. You can see the futures in the red. Let's take a look at Asia in the red across the board. Hong Kong down 2%. Europe is mixed. Here's our numbers from yesterday, nice and green. Volatility might get some love today if we start a big sell-off. So that'd be nice for those of us who have a chunk in volatility. 10-year, not really moving a whole much. Oil selling off a couple of percent. Pretty significant move there. Gold and silver up a bit. And Bitcoin hanging around 55 or so. So not much is going on. Now you've noticed GBTC is not tied to Bitcoin anymore. So expect GBTC to probably fall out of your portfolio today. So for a bunch of reasons. All right. Let's go back to the headlines and take a look at what's going on in the world. Yep, bunch of vaccine shots, first 100 days, high fives. He gets to celebrate all of that. Tech giants' earnings show their absolute dominance. I couldn't agree more. However, they're not really going higher. I don't think Amazon right now, it's up 4%. I don't think it holds that 4%, to be honest. I think it sells off. Maybe not all the way down to even, but I do think it sells off today. Robinhood IPO is coming up. I have to look at that. My initial reaction is I don't plan on touching it. But then again, it might be kind of a unicorn thing. So let me look at, I'll do some research on that. So here you go. Leon Kimmerman sees stock market lower a year from now due to tax rate / inflation pressures. So again, taxes, that's interest rates and inflation. So, you know, that should actually be the headline. That's why I'm writing it down. Interest rates and inflation. So yeah, so if it's lower than here, what do? You don't abandon ship and, you know, sell everything, but you can certainly go through and trim things out, which is what I'm going to do today. All right, had the NFL draft last night. I thought it went fantastic. Most of the picks made sense, except for the Raiders. Of course, they have to try to draft a third rounder in the first round every year, and wonder why that doesn't work out for them. Did that again. Congrats to the young man. But I don't know. We'll see. Yeah, Amazon's quarter, if you looked at the numbers at all, everything was just amazing. So no split, though. Again, I called that Apple wouldn't raise their dividend. They did. I called that Amazon was split, and they didn't. So crap. But I think that's coming eventually. So, all right, let's take a look at where we are year to date. So there's kind of three big indices, right? And you normally use the SPY, the S&P 500. Welcome to who just joined. Here's what we're talking about today, and we're pretty much going shorts. Prepare for shorts here in a couple of minutes. All right, here's the S&P 500. Yep, the straight line chart doesn't tell you anything. Really, you look at performance year to date. I bought up a bunch of portfolios last night and sent out some late night notes to folks. In the past year, we're looking at, you know, in the 6 months, there's gains in the 30%. I've had a portfolio that was a, you know, 7-figure portfolio. In the past year is up 80%. I mean, some amazing returns. When you look at the market, though, the market's up 12.5%. If you'll just call it 12 plus, that's an annual gain, right? For the S&P, that's the average annual gain, that 10 to 12% range. So, you know, we've already got it for the year. So what to do? All right, QQQs. NASDAQ hasn't been as impressive for all of the tech run up. You know, 55, and I haven't said it hadn't been that impressive. 55% the past year. Okay, still some of that was snapping out of the COVID, but you know, performance year to date after 4 months, you've got 8% in the bag. Now, would that continue? That would take you up to what, 24% for the year. I don't see that happening whatsoever. But I think there's a chance that we end up higher and a probability that we end up lower from here. So again, portfolio protection in place. And then the last one we'll take a look at before we switch to the open. DJI is the Dow. Well, no, it's not. DIA. And you look at it's up, you know, the Dow's up 11%. So really we've got annual gains at the end of April. So time to not be greedy, if you will. Okay, let's go over and set up for the open. Have about 30 seconds to go here. Good morning, everyone. Welcome to the On Time, On Target play of the day. We've got 4 screens in front of you and 5 seconds to the market open. We have the S&P 500 on the left on a 1-minute chart in the red for the open as far as the futures. We have BCS gapping down, Skyworks Solutions gapping down, and Twitter. Now, Twitter is out of our range. We normally do that 5 to 10%. It's well out of the range, but if it backs up some, it may set up for a further fall. I would need it to get up really almost to 58 before I would be even really interested in taking that short. Okay, Skyworks Solutions backing up nicely though, so we like that action here of it going higher. Just realize you're looking at about a $2 price target. I'd say $1.50 on this one. All right, BCS for some reason kind of doesn't look like it's moving. Yeah, it's moving a little bit. It is in the heart of the window. All of these are earnings plays. We'll zoom in here. All these are earnings plays, so we're going to look at Skyworks. All of them missed earnings to an extent. So again, we're going to wait for this to establish the high of the day. Right now in Skyworks, it's 187. So subtracting $1.50 from that would be 185.5. So that's right here. So get ready at 185.5 with the $1.50 stop. There it is. So click it in there. $1.87, excuse me, $187 is our upper limit. And again, we're taking this short. So get that arrow in there. It's a $1.50 stop. So you can start doing the math there as far as the points we're going to look at for selling off. So 184 would be our first R point. So that's when we're up the exact amount that we risked, if you will. 182.50 would be our second one. And then let's back out so we can get those on the chart. 182.50 is our second R point right here. And then our exit is all the way down at 181. Which is on the screen, which is kind of nice. So right all the way down there. So if you want to set your stops, 187 at the upside, 181 on the downside, and just let the thing cook. Okay. All right. Let's see. The market is backing up some, so good for the overall portfolio. Not good for our short, but again, I think our short's gonna continue just to fall off the cliff here. All right, zooming in on Twitter, continuing down. Lots of millions and millions of shares in Twitter. Trading hands. Barclays really hasn't moved much, 8 cents since the open, so we'll bail on that. I did want to look at Microvision, which is the Reddit name right now, MVIS. That's been up huge. Now it was down 20% earlier, but when really you back up, you look at the manipulation going in the stock in a 10-day. From $10 to 31, let's touch 20, let's go back up to 25. Now we're down, to 20, and then now 20 to 15. I mean, goodness gracious, this thing is all over the map, if you will. All right, what else do we have on the short side? Let's go back to a 1 minute chart here. Twitter backing up. You could look for an entry again. You're going to need about a 50-cent stop. So if it holds here, you would take the entry at 56.50. If it hits, I'll draw it on here. I'm not taking this trade, but it's going to hit. So there you're in the trade at 56.50 or the 50-cent stop up here at 57. And that puts you're taking that short. Again, not taking this one myself, just drawing it up here for you if you're interested. And of course, if it busts 57, then you're out. But if it holds, it'll be 56 would be your first R. 56.50 down at the bottom of the screen. I'll show you this on the zoom out. $55.50 there. I think I misspoke. $55.50 all the way down here, and then exiting at you'd have to do your own math. What is that? 55 would be the exit. So anyhow, that's what you have going on in Twitter. Again, I did not take that trade, but if you're in the trade, you're in the green there. Okay. All right, we're up over an R in our trade, so I like the downward motion of each of these candlesticks. Trying to go higher, can't. Trying to go higher, can't. Okay, let's look at some long names over here on the left. Amazon, I said it wasn't going to go higher. It was up 4% earlier. Let's see, is it going higher? No, it's not. Selling off. Yep. That's what Apple did yesterday, right at the open. Get back all those gains, right, that it had in the aftermarket. Look at Apple selling off. Well, it's down. It's up on the 4 minutes since it opened, but it's in the red overall. Google crushed earnings. was up big earlier in the week. That one's selling off. So you're seeing, see Microsoft sold off. So it's down, it's in the red too. And Tesla started the week off with being down after beating earnings. And I'm missing one more. Can't come up with it on the fly. Google. No, I think I already looked at that. Doesn't matter. All right. Let's see. The other longs we had today were WDC. That would not have worked. And the other one, Apto, which is Aptos Biosciences. And this is an earnings play, was gapping up. Does it hold? No, it did not hold. It's all the way back down, 50% off where it was earlier. So, all right, so you have, this is our play of the day. This is one is just for instructional if you want to take it. We're going to make sure if you're in your Skyworks, again, 187 is your upper limit, all the way down to 181 is your exit. And we'll come back to revisit that trade here in a minute. Getting some strength in the market, kind of like that. Okay. Let's zoom out a little bit and talk about what's going on. GBTC, again, Grayscale, Bitcoin, Trust. So why am I starting to sour on this? Well, Bitcoin is kind of paused at that 55 level. Yeah, I do think it's going to 100. I need a better way to hold it. I'm starting to sour on this. I think everybody's up in GBTC, but I anticipate leaving the name today, looking for a better answer. BioNTech, Moderna, those are your medical names. I think Pfizer's a little better name right now. So I do anticipate getting out of those as well today, if you're in all three. A lot of you are just in Pfizer. So really kind of cleaning up portfolios today. Not too many names in the green here. So let's look at the red side. I don't see the VXX. I would expect the VXX to be in the green, and it is not. What's going on in the VIX? Yeah, it is. All right, 1.66 in the green. Why am I not seeing it over here? Should have to troubleshoot that. Should be showing up. All right, Twitter off 11%. That's that trade we have drawn up. TQLB is a spec. Get out of that. My MNMD, Mind Medicine, super spec. I'll recommend people get out. Nobody will listen to me today. If you're holding for the long term, that's fine. But just realize I think the next move is down on MNMD. Sony, don't know why that's selling off. Revive Therapeutics is pretty speculative. MasterCard, QClean, just holding QClean through all this, not worried about QClean. Neo had earnings yesterday, beat earnings, didn't get any love. KWeb down a little bit, Shopify down a little bit. I think I'm out of Shopify too. So just cleaning house. So a lot of names to take a look at today. A lot of names are in the red overall. Refresh this on another screen. So yeah, everything's down between 0.5% and 0.75. So, and my call is that it continues red throughout the day. Let's take a look at our trade. We're at the 2R point, so we're just going to let that cook. And again, all the way down to 181 is the exit. So we'll revisit that here in a second for Skyworks. Okay, let's go over and talk about cash out refis. You guys are pretty, most people kind of know this stuff now because people are more fluent with refinances, but let's bring it up anyway. That did not work. We're going to try again to bring that up. Why is that not coming up? Refinance, Google Chrome. There we go. All right, now we got it. So what is a cash out refi? And I'm getting crushed by an ad up at the top that's right over the title where it says cash out refi. There we go. Okay, so you buy a home, and we were all taught as kids that you want to pay that home off as soon as possible, right? So you take out a mortgage so you could use leverage to get into the home, and that way you're using a leverage as a tool. However, as soon as you're in the home, we were always taught, do you need to pay that off? And generally that has been amazing advice for decades, but is terrible advice now. It was amazing advice because you were paying, 7% was my first mortgage in my house in Florida. So of course you want to pay that off, goodness. So when you think about how much money do I have to make to be able to beat 7%, that's significantly because you have to make almost, 8.5 or 9% to be able to subtract out the taxes that you're paying to be able to clear 7%. So when you have a 7% mortgage, yeah, that's a no-brainer. Pay that thing off as fast as you can. Strategies were to pay one extra payment a year, or another $100 a month or 200 or whatever you can do for cash flow, but get rid of that mortgage so you're free and clear. And the theory being that once you get rid of your first mortgage, if you buy another house, you just simply use the equity from the house that you had in your 20s and 30s to buy your house in your 40s and 50s. Same thing, equity transfer to your downsizing home in your 60s and 70s because you don't need your McMansion anymore because you don't have your kids running around everywhere. So that's kind of the old school. Well, now if they're going to give you a mortgage for less than 4% is what I use, but honestly, no, who's paying 4%, right? You're the village idiot if you're paying 4%. You're down at 3.25 or below, and you're in a fixed. If you take an ARM or whatever, that's on you. We've already talked about that, but don't take that stuff, in my opinion. But if you can honestly get money for less than 4%, then you're using leverage to get into a home. Just use the leverage. And we already talked about the returns on the S&P this year. We are what, 12% already. Dow's up 11.5, and Nasdaq's up 8.5. That's years of mortgage payments of interest that you've already had. And it doesn't always work like that, but go back a decade. It has worked that way for the past decade. So until you think American economy is going to just decrease, which I don't think that's going to be the case, then you want to basically hold your leverage that you have going into a home and use your money elsewhere. In the market, open in businesses, whatever else you need capital for. But if you did make what I would call current day mistake of paying off your house, the option to get money back out of your house is this thing called cash out refi, which is where, say you have a $200,000 home, to use kind of a starter home type number, and you paid it off, and now you can go up and get 80% of that back out. It's going to cost you $3,000 or $4,000, which gets wrapped in the loans. People think it's free. It's not. Bankers always get paid, but they wrap it in the loan so you don't really notice it. But you can go from having no cash and all this money sitting in your house to having, up to 80% of it back in your bank account. So that is a cool trick if you are trying to use that leverage elsewhere, right? If you are in retirement and you paid off your house and say you start having to spend money on medical expenses, you can go back into a house that's paid off and now get the equity back out of it, not all of it, but again, 80% of it with the cash out refinance. So these are tools that basically turn a paid off house back into a leveraged asset to be able to use your money elsewhere. Okay, let's go back over to our trade real quick. It looks like our trade, we got darn close to hitting in the 3-hour point. So back over to TD Ameritrade, did it hit it? We're looking at 181 as the exit. Come on, give it to me while we're looking at it. So again, we entered at 185.5. Our upper stop was below the high of the day, 187, and then 1, 2, and 3R down here. Didn't quite hit it yet, so I would, don't wimp out. Just hold out for the 181 exit there. We did look at another trade here in Twitter. We didn't take it, but it busted out to the high side, so we're not worried about that. All right, so here we are sitting very close to the exit point. Whoop, did it just hit? Nope, didn't quite hit it. That was me on the math there. So, all right, so we'll continue to watch that here. You can watch that off air. I'm gonna let you guys go. So good show this morning. Again, nice trade. We're at the 2.9R point. Come on, hit it while I'm talking. Hey, good enough. 181.03, we'll call that good. And we're back out of this trade. So again, nice 3-hour trade this morning. Again at 185.5, short on earnings for Skyworks, all the way out the bottom at 181. With that, I'm gonna let you guys go. Have a fantastic weekend, and we'll see you guys back Monday. Bye.